Hello students, myself Dr. Sheke Pratima, Ahmednagar Jilla Maratha Vidyaprasarak Samaj, New Arts, Commerce and Science College, Ahmednagar. Rural Development in India. This is the 5th chapter as per the 11th standard syllabus. In the last few videos, we have completed near about the definition of the rural development, then introductory part, then the rural developments related the different concepts like the agricultural concept, the village industries, then service sector and also the education. Then we have discussed the definition of the World Bank, then the occupational structure in the rural development like the agricultural sector, then industrial and also the service sector. In some significance we have discussed already, but the most important thing is like the agricultural credit in India. In the last video we have discussed that the classification of the agricultural credit. There are two ways. First is on the basis of the tenure and second is on the basis of the purpose. Then in the last video we have discussed the sources of agricultural credit in India. There are two sources. The first is the non-institutional sources and second is the institutional sources. But the main thing is, what is the meaning of the non-institutional sources? The non-institutional sources means like the supportive sector, the source which is not the 100% legal part, and the second thing is which is not the governmental source. So the non-institutional finance forms and the important source of the rural credit in India, the constituting around the 40% of the total credit in India. Means if we have to consider the rural credit, so the 40% credit in the non-institutional sources. So the interest is the non-institutional sources is like the high. So the land or the assets are kept as the collateral securities. Means the security is also important for that the agricultural sectors, the credit. But the main thing is the non-institutional credit is always the supportive. It's anytime, anywhere it is available. So that is called as the non-institutional sources. And the institutional sources, this is the legal part. Means the different banks, the financial sectors will involve for the institutional sources. That is the difference between the non-institutional and institutional sources. So in the non-institutional sources, we already discussed that the first point is like the money lenders. Money lenders, it is the most important the profession, which is the developed in the rural area, which is support the rural area. So the money lending has been the widely the prevalent profession in the rural areas. It's the license sector. The money lenders will accept the license and then they will credit their credit it is provided in the rural area. The money lenders charge the huge rate of interest and the mortgage the property of the cultivators. So it's not the 100% the legal part, but sometimes it's illegal. But the government will control that sector, the money lenders, and the person who is accept the license, who is a license holder person. So those are also the support for the agricultural sector. Those are also the provide the credit in the agricultural sector, and also they are the prevalent that that profession. They always establish the profession. So that's why that is the control, means the all over that sector's control will be the government. Then next is the other private sources. So which private sources will support for that agricultural sector? First is the traders, different traders, then landlords, then the commission agents. So these all peoples are also the accept and the charge the different rate of interest. The different traders, then landlords, then the commission agents, they will also apply different rate of interest. And basically the non-institutional sources of that the credit, so that the rate of interest is so high. Then next is the credit from the relatives, then the friends, etc. So these all are the support for that sector, that is called as the non-institutional sources. So good faith, some good faith, otherwise the relation. It is the create that part, maintain that part. Okay, so let's discuss the second point related to the rural development in India and also the sources of the agricultural credit in India. The second point is like the institutional sources. See the institutional sources. This is the general policy on the agricultural credit. It has been the one of the profession, the institutionalization aimed at the providing timely and the adequate credit to the farmers. You know, the first of all, the credit, if the any bank, any institution will provide the credit for that agricultural sector, so the time is most important. The proper time, if it is a provide, so that part, otherwise that credit it is the usable in the agricultural sector. But we never consider the time, and if time goes on and then we provide the credit, so that time and that credit is not important for that sector. So that's why the institutional sources, it's always the support for that sector, and it's provide the timely and adequate credit to the farmer for the increasing the agricultural production and productivity. If the credit is proper time, it is provided, so that time we increase the production and productivity. Basically productivity means what? The per hectare, the production, if it is increases, that is called as the productivity. So the providing better access to the institutional credit for the small and marginal farmers and other weaker sections to enable them to adopt the modern technology and improve the agricultural practices. See, the modern technique is most important for the agricultural sector. We abolish the traditional ways and then we accept the modern technology, so that time we increase the production and productivity. The farmer's experience is most important. First of all, every farmer, if they test our soil and also the water, so that time they better know what is the absorbing capacity of the soil and how many percent we provide the water. This part is also important, but the other is then the credit. The credit, if it is a proper way and if it is the available for proper time, then the farmer will invest that credit on that the piece of land, otherwise that the agricultural sector. So they adopt the modern technology and improve the agricultural practices has been a major part of the policy. That is the institutional sources, that is this policy of that institutional source. So the institutional sources of agricultural credit in India, it's the most important, and the first source is like the NABARD, the National Bank for Agricultural and Rural Development. SINA, the NABARD is the second bank of RBI. Basically RBI is the Reserve Bank of India, is the central bank. The establishment year of the RBI is 1935 and the nationalization of RBI is 1949. And the second bank of the RBI is the SBI, and the SBI the establishment year is 1955. And also the another second bank of RBI is like the NABARD. So NABARD is specially established in the rural area. That bank will support for the rural area. It is the apex banking institution to provide the finance for the agricultural and rural development. So the National Bank for Agricultural and Rural Development was established in the 1982. The 12th July 1982, that is the establishment year of the NABARD, with a paid up the capital of rupees 100 crores by the 50-50 contribution of the Government of India and Reserve Bank of India. It is the totally governmental bank. It is the totally nationalized bank. And who is control the all over agricultural sector? The NABARD will control the all over agricultural sector. See, the NABARD is the apex institution in rural credit structure for the providing the credit for the promotion of agriculture. Then there is small scale industries, then cottage and village industries, handicraft related to the agricultural sector. Means the substitute business, otherwise the substitute the occupation. It is most important. So the NABARD will support for these all the sectors and these all the business. So the substitute goods is also the important for that agricultural sector. We know the cooperative banks, then agricultural bank, the all banks which is the provide the credit for the rural area, otherwise the agricultural area, those banks and those the institution will control by the NABARD. The capital, it is the 10,580 crores as of 31st March 2018. It is the paid up, the figures will paid by the NABARD. The consequent to the revision in the composition of the share capital between the Government of India and the RBI. See now, the 50-50 share of the NABARD, the 50% share, it is the government share, the Government of India's shares, and the 50% is the Reserve Bank of India. So, the NABARD is the fully owned by the Government of India at present. The NABARD is fully owned by the Government of India. NABARD is the specialized agricultural bank which is controlled all over the agricultural banking system and also the cooperative sector. We know the cooperative sector, the base of the cooperative sector means which base formed by the cooperative sector? The agricultural development of agricultural sector or the rural development. That is the base of the form of the cooperative sector. And the NABARD will also control all the cooperative sector. So that is the institutional sources, means it's a legal part, it's the support for that agricultural sector. So this bank will also provide the different funds for that agricultural sector and also the agricultural bank. So I think you have to understood that these two parts, like the sources of agricultural credit in India, there are two ways. First is the non-institutional sources and second is the institutional sources. In this video, we have only discussed that the institutional sources, because the non-institutional sources we already discussed in the last video. But in this video, I focus that the institutional sources. What is the difference between the non-institutional and institutional sources? The non-institutional sources, anywhere and any time it is available. But the institutional sources, that is the totally legal part. It is related to the RBI. Non-institutional sources is not 100% related to the RBI, which is not 100% controlled by the Reserve Bank of India. But the institutional sources totally controlled and forwarded by the RBI. Okay, I think you have to understood that the difference between the non-institutional sources and institutional sources. Okay, so goodbye everybody.